Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Tuesday. Correction, today is a Wednesday. Well, at least local shares today staged a rebound following yesterday's retreat when second quarter GDP contracted quarter on quarter at least. But year on year, economy still grew at 11.8%, finally moving out of recession for the first time in 5 quarters. Today's a different story, though, as the PSEI is now at 6,666, edging higher by 0.7% after another last-minute buying spree. Now, looking at our leaders and laggards, a number of property shares leading the pack here. Ahead is SM Prime, higher by 3.25% to 35 pesos a piece. Ayala Land also in the green, as you can see right here. DMCI not far behind, up by 3.2%. That's after COL Financial raised its earnings and share price estimates following that 217% jump in first half core net income to 8.3 billion pesos. Now, on the other hand, FGen is a day's worst laggard here, down by 2.5%. Now, let's take a look still at some earning releases. Let's start off with Jollibee, finally swinging to profit in the second quarter after a net loss of 10.29 billion in the same period last year. For this year, you have the country's largest food operator posting a net income of 976 million pesos as revenue hit 36.7 billion pesos. So that marks a 57% increase year on year. That's on the back of higher system-wide sales for the quarter. First half net income also at 1.13 billion pesos compared to that 11.9 billion peso loss last year. But when compared to pre-pandemic levels, these figures are still way lower, with second quarter revenue still down by 15% compared to their 2019 showing. But one other thing that really moved Jollibee today is news that the food operator is buying out its partners in Tim Ho Wan. Its subsidiary, Jollibee Worldwide, as it is, owns 85% in the fund, but it will now purchase the remaining 15% of other investors in Titan Dining, which owns the Tim Ho Wan brand. Jollibee hopes to aggressively expand it in mainland China with a 100 outlet target within 4 years. While JFC shares were actually poised to end higher today, that just did not materialize, with the stock ending the day in the red, lower by 0.5% to 191 pesos and 60 centavos a share. Now, lastly, let's have a quick check of Cebu Air. The airline still at a net loss here for the second quarter at 6.47 billion pesos, narrower compared to their net loss same time last year, which was at 7.96 billion pesos. Revenue, however, saw an improvement at 3.2 billion pesos compared to 1.4 billion pesos last year. Now, looking at first half passenger revenue, that tanked by as much as 82.4% to 2.03 billion pesos due to a 73% drop in passenger volume, which only came in at 1.2 million, as well as fares coming in lower by 34%. Cargo revenue, however, proved to be a bright spot here for Cebu Pacific. It improved by 27% to 2.8 billion pesos. Cebu Air, as you can see in this chart right here, retreats today after a 2-day rally. It's now at 45 pesos and 30 centavos a piece, down by 0.4%. Here are other headlines we're keeping our eyes on. Japan remains the country's top source of official development assistance, or ODAs, in the last 20 years, providing at least $14 billion worth of loans during the period. The Finance Department says this accounts for more than 70% of the Philippines' foreign aid portfolio. Japan has provided 1 trillion yen, or $9 billion worth of loans under the current administration. This is to mainly fund infrastructure and economic development programs. Philippine and Japanese officials met late July to discuss further expansion of loan commitments. The Agriculture Department is gunning for higher budget next year in hopes of amping up farm production. The department submitted a 250 billion peso budget plan for next year, But it looks like the DA is likely to receive less than a third of that. The department says around 72 billion pesos will likely be allocated to them in 2022. However, this still excludes budget for attached agencies under their helm. Agriculture Secretary William Dar says he will still negotiate this amount with Congress. The department is banking on the crop sector to push the industry to a 2% growth target. That's despite the 1.5% dip in farm output in the second quarter. The country may have technically exited recession after headline second quarter growth came in at 11.8%, but still, growth from April to June contracted on a quarterly basis due to lockdowns back in April. And with the capital in a similar scenario now, how will this affect our recovery prospects for the remainder of the year? Let's get insights from Moody's Analytics Chief Economist for Asia and the Pacific, Steven Cochrane. Good afternoon, Steve.
Good afternoon.
Okay, so prior to yesterday's announcement, you were projecting a 10% growth for the second quarter. What do you think was the main surprise here for that higher showing at 11.8%?
Well, 10%, 11.8%, that difference isn't really that much. And the overall number is in low double digits, largely because the second quarter of a year ago was so weak. So everything came back fairly well as compared to a year ago. I think the real important numbers to be looking at, though, as you mentioned earlier, are the quarter-to-quarter numbers, which showed actually a decline when looking at seasonally adjusted data from Q1 to Q2.
Okay, and looking at those set of numbers, at least for the second quarter, that's a contraction of 1.3%, owing to the fact that we did return to lockdowns back in April.
Yes.
And that's exactly where we're at right now, even stricter now with the capital in ECQ, at least for the next 2 weeks, because of the threat of the Delta variant. What does that say about how the economy might fare for the third quarter and the remainder of the year?
Yeah, it actually, for the third quarter, doesn't bode very well, considering that, as you mentioned, the capital region is in strict quarantine at the moment. Consumer spending is very, very weak. If you look at consumer spending, even like over 2 years ago, to look through the pandemic recession, consumer spending is about 9% below where it was at this time in 2019, actually in Q2 of 2019. So consumer spending is still very, very weak as individuals, households can't go out, can't eat in restaurants, can't do the things that they would like to do every day. Another aspect of the economy that's still weak as well is the externally focused economy in terms of exports. If you look at exports around the Asia Pacific region, they've come back pretty strongly. But if you look at exports compared to, again, back late 2019, they're only up by about 2% over that period. That's the weakest performance in terms of export trade of all the countries in the Asia Pacific region. So there's weakness on the domestic side, weakness on the external facing side of the economy. So it does not bode well for Q3. I would think Q4 will be better once we can get out of quarantine, but it's a fairly weak performance right now.
Okay, and having said that, are you at least going to revisit your growth estimates here for the Philippines?
Yes, we have. So our forecast now for this year is only for about 4% growth. That's fairly weak growth compared to the 6-7% we've gotten used to over the years prior to the pandemic, and below what we were looking at just a couple of months ago. We really thought that we would begin seeing a period of steady quarter-to-quarter growth as different parts of the economy began to accelerate. Normally, we would think that maybe there would be a good stability in terms of exports, and then when the quarantines are lifted, we'd see consumer spending grow quickly, and then followed on perhaps by government support as infrastructure projects, say, are restarted and accelerated and so forth. But none of that process is happening right now. So there's a long way to go to get a concerted quarter-to-quarter pattern of economic recovery. I just don't see it happening yet.
And especially now, you have the Delta threat proving to be a more situation by the day. Talking about the situation here, at least in the Philippines, how is this at least expected to worsen the economic scarring in the country?
Yeah, it's a very good question. The longer this goes on, and the fact that there is only a limited amount of support from government in terms of lending a helping hand to either unemployed households or small, medium-sized businesses, there's a good chance that many of the businesses that employed people simply won't have the ability to come back. They won't have any savings to rely on. They'll be difficult to go out and get a loan to restart business and so forth. So it could be, it could add to the difficulty in terms of the economy coming back. And I should say that, the last I looked, the number of new COVID cases is almost back up to the peak level that the Philippines had back in April of this year. So we've got a ways to go in terms of not only the length of quarantine, but making sure the quarantines are effective in keeping people from interacting with one another and really bringing this COVID Delta variant to get it back on its heels, so to speak.
But is the country's current pace of vaccination somehow going to offset these problems?
This is perhaps the most important aspect of economic recovery. We can see it everywhere around the region where there is an acceleration in the pace of vaccination. The reported number of cases is beginning to slow. Pretty good correlation between the speed of vaccination and how difficult it is with COVID. And that's the thing that I think the Philippines needs to do. And it's a little bit problematic. I know that access to enough vaccines has been difficult. The government needs to continue to work on procuring vaccine. And then more importantly, getting it around the country, right? So that everybody across the entire country is vaccinated and you don't have pockets where there would be continued vulnerability, particularly to the Delta variant. So this is absolutely critical.
Now, you were alluding to this earlier about the domestic economy and how it's important to somehow support consumers here. I mean, additional spending here, the government is going to unleash at least 10.3 billion pesos in NCR alone for cash aid. Will this be enough to somehow help in the heavy lifting to at least cushion the blow?
Well, this is a good move, and frankly, I think it's somewhat late in coming. It should have been, it would have been better to have something like this, say, 6 months ago. But better late than never, and it will help. And of course, is it enough? It really depends on how long the quarantines last. If the quarantines can be lifted, say, in a month's time at the latest, it will be very, very helpful. If the quarantine has to last even longer, then I would say there could be even need for more.
Would you say then there's a necessity at least for another stimulus measure? I mean, a number of lawmakers, of course, still pushing for Biennium 3.
Yeah. To be honest, I think that if there was another round of fiscal stimulus, I think it would be very good for the economy. I think it'd be very good in terms of just keeping consumer spending going, even at the relatively low level it is today. And again, trying to provide enough support to businesses that are still operating so that they can continue to operate in some limited way, keep people on payroll, and also remain in that position where once the quarantines are lifted, they can expand production, expand services, and do that in a very quick order.
And last question now, of course, a big question. How long before the Philippines gets to go back to pre-pandemic growth?
That is the big question, right? Because that's really, in a sense, that's the true measure of economic recovery. And not so much pre-pandemic growth, but when even the level of the economy, if you use GDP as the measure of when it gets back to its level prior to the pandemic. With our forecast now, with our revision down for this year, we're looking at maybe the middle of next year, the middle of 2022, before total output in the economy reaches back to where it was pre-COVID, and then starts to enter what we would call a period of expansion.
All right. Thank you very much for your insights. Again, Moody's Analytics Chief Economist for Asia and the Pacific, Steve Cochrane. Thank you, sir.
Thank you.
And those are the biggest stories this trading day, August 11, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.